In a world increasingly defined by rivalry, innovation, and recalibrated power, the US-China confrontation has escalated beyond trade into a high-stakes battle for technological supremacy. From rare earths to artificial intelligence, the front lines are shifting from the mines of Baotou to the chip labs of Shanghai and the policy chambers of Washington. Recent moves, such as the China easing magnet exports and Trump greenlighting the NVIDIA chip sales to China, that reveal a complex dance of tension and pragmatism. Meanwhile, Beijing's deepening military ties with Vietnam, its strategic reduction of the U.S. debt holdings, and restrictions on foreign exits signal a calculated reshaping of global economic order. And as the U.S. scrambles to rebuild its rare earth supply chain and reforge alliances, questions loom. Is America losing ground, or is this just recalibration and not a collapse? In this volatile arena, where geopolitics meet silicon, the future of global power is being rewritten. And I'm Salma El-Fiki, and welcome to Think Tank.
Our world is becoming unhinged.
The Washington Post has reported that Trump's sweeping tariff strategy risks fracturing the U.S. alliances and destabilizing global trade faced with mounting global backlash. European leaders, already weary of Washington's shifting policies, warned that these measures could disrupt transatlantic commerce and embolden rivals like China. The European Union, now bracing for potential fallout, has signaled growing frustration, with Brussels cautioning that such protectionism moves undermine shared economic interests and weaken collective leverage against Beijing. And as global supply chains tremble, the world watches closely. Will Trump's aggressive trade tactics redefine American power, or will they isolate the U.S., reshaping the global order in China's favor? And according to the Financial Times, the world is witnessing a critical point in the U.S.-China relations. The recent exit ban on U.S. Commerce Department employee following the Wells Fargo incident highlights China's escalating use of these arbitrary measures. This isn't just about individual cases. It's a clear signal of deeper bilateral tensions, particularly amidst their ongoing trade war. These actions by Beijing, often veiled in opacity and lacking due process, are directly impacting American citizens and businesses. The U.S. Embassy has rightly voiced its concerns, emphasizing the detrimental effect on relations and urging immediate repatriation of those affected. This pattern of behavior casts a long shadow over the predictability of operating within China. It's a test of international norms. While China promotes tourism, its inconsistent application of law contradicts efforts to build trust. The Business Standard has highlighted that, having weathered the Trump trade war through strategic resilience, China now confronts Europe with assertive economic diplomacy. It counters the EU tariffs on electric vehicles with export controls on critical minerals, while deepening ties with Russia, defying Western pressure and reshaping global alliances. Beijing, emboldened by perceived Western divisions, leverages its economic clout to resist external pressure. With rare earth restrictions and procurement bans, it signals that Europe's demands will not go unchallenged, even as it courts European business giants to dilute political tensions. Yet China cannot afford total estrangement. Europe remains vital for absorbing its booming green tech exports. As the EU summit in Beijing unfolds with low expectations, one truth emerges. Both sides are locked in high-stakes standoff where leverage shifts, but trust is scarce. As the US-China tensions escalate beyond trade into tech and currency battlegrounds, China quietly reshapes its financial strategy, reducing the US debt, stockpiling gold, and redefining economic power in a shifting global order.
The confrontation between the United States and China is no longer just a trade war. It's an all-out race for technological and economic dominance. From rare earths in Inner Mongolia to AI labs in Shenzhen, the battlefield is evolving. Trump's recent decision to allow NVIDIA to sell smart chips to China appears to contradict his own technological decoupling policy. Yet this move may be tactical, a temporary relief valve to ease pressure on US tech firms, not a reversal strategy. New tariffs are reshaping global supply chains. Sectors like electric vehicles and semiconductors are hardest hit. Meanwhile, China's ban on foreign companies exiting its market is not panic. It's a calculated strategy to retain tech talent and capital. The US is racing to rebuild its rare earth supply chain, but China still controls over 80% of global production. This dominance is not just industrial, it's geopolitical leverage. Vietnam and its neighbors are now central to economic and security realignments. With new joint drills and trade pacts, Asia is becoming a theater of both cooperation and containment. As China reshapes the game, from rare earths to AI, it's not just about winning the race, it's about rewriting the rules. And in this new world, power is no longer just measured in GDP or military might, but in data, chips, and strategic minerals. China reshapes the game.
And providing more analysis about the most recent updates concerning the strategic shifts in the relationship between the United States and China, joining us from Beijing is Mr. Nader Ronghuan, the writer and political analyst, and from Dubai, Mr. Ali Hamoudi, the investments and wealth management advisor. Welcome, gentlemen, to Think Tank, and thank you for joining me today. Mr. Huan, with China easing rare earth exports after months of strategic restrictions, do you think is this Beijing signaling a tactical retreat or just a recalibration of its economic leverage in the global supply chain?
Thank you very much for having me. China has approved a certain number of export license applications for rare earth and related products concerning a rising global demand, and to implement the important common understandings reached by the Chinese and U.S. presidents, and also the agreement reached by the two countries in their recent London talk. In response, the U.S. government has also lifted high technology restrictions on China according to the agreement reached in London talk. So it's not a tactical retreat, but China is willing to keep the global supply chain of rare earths open and stable.
Okay, Mr. Hamoudi, Trump's new tariff strategy has rattled global markets. How do you think are investors recalibrating the portfolios in anticipation of a prolonged US-China economic standoff?
Hi, thanks for having me. Well, I mean, we know that markets recently have become really volatile, and uncertainty is at all-time high, obviously promoting investors to readjust and rebalance their strategies. We have seen many institutional and retail investors are reducing exposure to tightly coupled markets, for example, like China, which are very much dependent on supply chains and exports. There is obviously a pivot towards regions perceived by investors which are much safer or less geopolitically at risk, such as Southeast Asia, India, and even some certain African countries are with a growing consumer basis and a good manufacturing capacity have seen investors moving over there until hopefully this uncertainty, which has plagued the markets for the last 6 months, and this is Trump's in his first 6 months. We still have almost 3 years and a half of this uncertainty, and the problem is I don't think this uncertainty is going to end. It did not end on the 9th of July, and I don't think it's going to end on the 1st of August. Trump is quite happy exercising, which he learned from his first term. The only real power that he has is with his executive orders. That's the only power that, as the president of the richest and the strongest and the most powerful country in the world, this is actually what the only thing he can do without going to Congress, which is the imposition of these sort of tariffs on the basis of protecting national security.
Mr. Huan, China's recent military drills with Vietnam come amid the U.S. tariff pressures. Does this mark a new phase of geopolitical alignment in Asia to maybe counterbalance Washington, do you think?
Firstly, China does not want to participate in any geopolitical competitions with the USA in any parts of the world. And the recent military drill between China and Vietnam is not targeted at the USA and is to safeguard the regional peace and stability, especially in the South China Sea, and also to further enhance strategic mutual trust and strategic coordination between the two militaries.
Okay. Mr. Hamoudi, with the US and China battling for the AI dominance, do you think is global capital now shifting maybe towards hybrid supply chains that hedge against both superpowers?
I mean, obviously, companies and governments are actively seeking, in my opinion, to develop a hybrid supply chain that sort of involves multiple regions, sourcing from both North America, Southeast Asia, India, and others. The goal, obviously, is to hedge against these geopolitical risks. Tariffs, export bans, sanctions, avoiding really over-reliance on either China or the United States. Yes. So it can only make sense. And in my opinion, by doing this, I mean the U.S. in the imposition of sanctions and restrictions on the export of technology to China, it might delay China getting to from point A to point B, but it's only a matter of time. You can't stifle knowledge or innovation. Sooner or later, China will get what it wants. It might even surpass the United States in terms of semiconductors and sophisticated chips.
Technology. Well, Mr. Huan, as China further reduces its holdings in the U.S. Treasury bonds, is this a long-term financial strategy to maybe weaken the dollar dominance, or just a defensive move amid rising tensions?
China does not initiate to weaken the dollar dominance by reducing its holdings in U.S. Treasury bonds, but it is a long-term financial strategy to reduce the financial risk, because China now think that firstly, the U.S. Treasury bonds is no longer a safe assets as many years ago, and secondly, China is diversifying its trade partners, especially with the BRICS countries and the global South countries. So it's very natural to reduce its holdings in U.S. Treasury bonds.
Mr. Hamoudi, the NVIDIA's return to China's market raises questions. Should global investors see this as a green light for tech firms or just a fragile truce in a broader decoupling trend?
Well, I mean, I think we can see it as sort of contradicts pure decoupling. Yeah. Officially, the Trump administration emphasized technological decoupling, but this move, as you mentioned, sort of indicates a more pragmatic approach, obviously, limiting some restrictions to avoid damaging global supplies and damaging their own industry as well, getting more stability. Go ahead.
Yeah.
I was just saying, it's a balancing act. While some obviously restrictions remain on most of the advanced chips, allowing sort of sales of certain hardware could help sort of maintain U.S. Technological influence in the global leadership without entirely sort of alienating China. This dual approach, if you like, sort of highlights the tension between the strategic containment and economic pragmatism. The problem, in my opinion, with America and the American administration is that it's like they know what's coming. I mean, they know sooner or later America would not and will not be in the same current position that it has enjoyed since really the Second World War, being the financial superpower and the military superpower for the last 8 years. It's only a matter of time before China surpasses the U.S., certainly in terms of financial clout, in my opinion. This could happen in 10 years, 15 years, 20 years, but it's happening for sure. Many people in America, or many thinkers in America, have already sort of realized this point. Hence, they are investing more in Southeast Asia and in China. And even Apple, this notion that Apple is going to close their factories in China and start making iPhones in America, it's in the White House's dreams, really. I don't think it's ever gonna happen.
Okay, Mr. Huan, Beijing's ban on the foreign firms exiting the market has sparked global concern. Should this be seen as a protectionist maneuver or just a strategic effort to retain technological assets, do you think?
As far as I know, there is no ban like this from the central government of China, and China respect the market economy rules and commercial orders, and also China is determined to attract.
So, sir, you're saying there's no ban on the foreign firms exiting?
Yeah, there's no ban. If the foreign firms want to leave, he can leave. But China is determined to attract more foreign investment through a series of policies. And as we all see that in China, that invest China means invest future, invest future.
Mr. Hamoudi, the rare earths crisis briefly threatened global manufacturing. Should investors now view critical minerals as the new oil and a top-tier asset class, in your opinion?
I mean, certainly. I mean, we have, I guess, not a sort of an investment asset class, if that's what you mean, but it is certainly very important for supply chains, for technology, and the problem again with America is that China currently controls over between 16 and 80% of global rare earth production and processing, making it, whether you like it or not, a dominant player, which is, we know it's crucial for high-tech industries, defense, renewable energy, consumer electronics. So for sure, the U.S. government is trying, with the private sector, to invest heavily in rebuilding domestic rare earth supply chains, including maybe opening old mines, such as Mountain Pass in California, and providing initiatives for exploring new projects. But we know rare earths it's very costly, it's very pollutant, it's a dirty business, really, to manufacture rare earth that most of us use in our mobiles, plasma screens, what have you. Even in the space industry, it's very important.
Mr. Huan, China's deepening ties with Russia, despite the Western sanctions, suggest a long-term alliance. Does this indicate a new axis of global power or just a strategic overreach, in your opinion?
The China-Russia relationship is based on no alliance and no confrontation, and it's not targeted at any third part, and it's not a threat to any other countries, and not influenced by any third part. So it's a comprehensive strategic partnership of coordination. It's not a strategic overreach, but it's a long-term relationship.
Mr. Hamoudi, Vietnam's sudden tariff pact with the U.S., followed by joint military drills with China, show a country caught between two giants. How should investors read this dual alignment, do you think?
Well, I mean, it's at the end of the day, Vietnam is sort of an emerging market. It's one of we call them the tigers in the Southeast Asia, and of course they have to sort of live through this uncertainty or uncertain situation that might last 4 years or might last even more. We have seen China opening new factories in Vietnam in Trump's first term in order to basically bypass all of these tariffs. But it enjoys a strategic location. It serves crucial nuances in the Indo-Pacific, offering proximity to the shipping lanes of Southeast China. And it's also trying to diversify its trading. And for other importers and other economies, it also offers sort of diversification of their supply chain. So that's why multinational firms are probably relocating their manufacturing and supply chains operations from China to Vietnam to mitigate such risks associated with the U.S.-China tensions.
Mr. Huan, the EU-China summit in Beijing ended with very little concrete progress. Has Beijing concluded that European unity is weak and can be outmaneuvered, do you think, in that sense?
In my opinion, China never think that the European unity is weak, and China think that European unity is a very important partner for China.
But the thing is, I'm sorry to interrupt, it's just because that the EU-China summit ended with very little concrete progress. So that was the deduction, basically.
But what I want to emphasize that the president of European Council and the president of European Commission will visit China in this Thursday, July the 24th. And also the Chinese president Xi Jinping will meet with them, and the Chinese Premier Li Qiang also will hold with them the 25th China-European leaders meeting in Beijing. This will happen in this week.
Mr. Hamoudi, as China diversifies its foreign reserves into gold and Asian assets, could this signal a shift in global capital flows and investment corridors?
I don't think it will signal. It has already signaled. It's already happening. This shift into gold and other assets, and countries with big positive cash flows like China are investing less in U.S. treasuries than before. And we know China is being buying physical gold to bolster their reserves for many years. So it's already happening. What's happening now in terms of these uncertainties and these the weakness in the dollar and the perceived interference with the independence of the Federal Reserve is sort of making it even more prominent, and more countries and more institutional investors are actually diversifying into assets like gold, which are seen as a safe haven, and regional assets in terms of China, which aims to reduce basically the exposure to dollar-centric global financial system to mitigate these risks. So it's already happening. What the U.S. is doing now in terms of their current administration, it's augmenting it. It's making it, it's happening much faster maybe and much deeper than we would have anticipated if things had stayed the same before Trump came to the White House.
Mr. Juan, with NVIDIA's CEO receiving more or less a rock star welcome in China and resuming chip sales, is Beijing successfully exploiting divisions in Washington's tech policy, or is this just a temporary reprieve?
I think in this field, China is successful because because the U.S. policy to prevent China's progress in technology field is will failed in the end, because as the NVIDIA CEO says from himself, that where is the will, if there is a will, there is a way. So that the China's market is very important for these AI companies, and also for global AI companies in the world. And as he also said, if they're with NVIDIA or without it, China will make the innovation, because the pressure will also, where is the pressure and where is the innovation comes out.
Mm-hmm. Mr. Hamoudi, with U.S. tech firms like Apple and Tesla increasingly dependent on the Chinese supply chains, how do you think is this shaping investment strategies in the West?
I mean, as I said earlier, we have seen such diversification by investors into markets less prevalent to such tensions between the U.S. and China. And we might have seen even Apple making some gestures that they might diversify into other countries like India. But the actual fact is, especially to do with Apple, I think they have invested billions in their manufacturing centers in China. So looking much ahead, they know that the situation in the U.S. and that whoever occupies the White House is not going to last more than 3.5 years from now. So they're not going to. This notion again that Trump sort of tries to propagate to his supporters, that he's going to make everybody who has all these American brands who are making iPhones and other sportswear outside the United States to come back and open factories in the U.S. This is simply it's not going to happen. First of all, it takes years and years and billions of investments to make such a move. And secondly, the U.S. consumer has been used for so long on paying affordable prices for their iPhones or for their sportswear. They're not going to pay 3 times or 4 times the cost simply because we're going to make America great again. So I think investors know that well, so they are repositioning their investments in the hope that this uncertainty sooner or later will fade away, on maybe Trump gets his attention on something else other than tariffs.
And that was Mr. Nader Ronghwan, the writer and political analyst, and Mr. Ali Hamoudi, investments and wealth management advisor. Thank you both so much for your special insights and this valuable discussion. And in this high-stakes era of the US-China rivalry where tech, trade and trust collide, the world watches as power shifts, alliances evolve, and a new global order emerges. And the battle for dominance is no longer just economic, it's strategic, ideological, and irreversible. And that brings us to the end of today's episode of Think Tank, which always unveils the complexities of our changing world. Thank you for watching and stay tuned for more updates on Qnews.